Okay, everyone, today is December 30th, 2013, one more day, and that will be the end of 2013, and we'll be welcoming 2014. Let's take a look at Twitter. I put out a couple of tweets earlier today, warning people, be patient if they're not trading, day trading Twitter. Then just be patient and wait for the setup to develop and wait for the trigger. So hopefully, a lot of swing trader didn't get sucked in on a little short rally there during the midday. But let's go to it anyway and see what have transpired. We're talking about this possibility here, this level that's somewhere around the 60 level here. You can see that the close on this particular day is 60.01, and today is actually closed near that 60.33. And if we let's go and take a look at the historical weekly chart here. We mentioned this last week. I put in this big shooting star candle essentially, and then today we basically got this little doji here, and then if we take a look at the 30 minute, the 30 minute is the chart that I posted on Stock Tweet earlier today when it get to this point here, and I essentially told people basically just be patient when it got to this point here. I basically was looking at maybe there's a little bounce here. I think a lot of people is looking at this because they said, hey, there's a double bottom and it got a little pivot breakout, and they probably play it up. So for a day trader, that might be a good scalp. But for a swing trade, there is no signal and no setup, because if we go back and take a look at the daily chart here, there is nothing there to say that this retracement here, this pullback or sell off or whatever you want to call it, have consolidated and set up for another move upwards. So we basically just have to wait for that setup to come. So right now, essentially, we're basically still looking at a potential downtrend on Twitter. But if you got in, if you're a day trader and you're an experienced day trader, then you probably could have scalped, a couple bucks off of that. And, because you have to know when to get out. And hopefully you're not trading based on an hourly basis, even a 30-minute for this stock to try to trade this guy is a little bit of of a challenge. And usually if you want to trade some high beta stock like Twitter, you basically want to trade in maybe a 15-minute or a 10-minute or even 5-minute bar. So you can see that essentially we're talking about this particular level as it broke through here. And here's this little shooting star. This formation here basically telling you this is it, right? On this rally here, unless you want to chase this gap here. Essentially, it was trying to fill this gap. So once you get into that point, you essentially want to start taking your profit, and then start bailing out. And you can see that once it's start coming down, you just took all the profit out. So if you're not an experienced day trader, most likely you probably got caught and probably end up losing some money. Hopefully you were able to break even and just bailed out if you didn't catch it early enough. Because if you waited and tried to play this swing, then most likely let's say you're trying to get in at this point here. A lot of people probably looking at this this 62 and say oh yeah, it's going to reverse now. Let's go. And basically you are being trapped right now, and you are losing money if you're holding overnight, because I think a lot of people is probably hoping for this stock to go back up tomorrow, which is not saying it's not possible, like this, but I think most likely the scenario is that we're going to come down here. Remember, we were saying that we're essentially looking for this 60. A lot of people was looking at this 60, and I'm saying that it's going to overshoot this and then come down here, and most likely it might even come down and test this guy here and get below this 20 EMA. There are a lot of traders also looking at these 20 EMA or 21 EMA or whatever that may be, some moving averages here. And if you plot some of the exponential moving average, you can see it's kind of crowded, cluttered around this area. So you can see that there are some some resistance point here or some support level that a lot of the traders think that they're gonna hold support and look for a bounce on there. Any kind of bounce right now is basically could be a potential bear trap, or a bull trap here, because if you're trying to catch this, on a bounce, you better have your fast finger and also thinking about day trading. Otherwise, the likelihood for a stock like Twitter will trap out of the people. And most of the time, when you see a stock moving like this, uh, you know there's more people lose money on a big move like this than actually make money because what happened is that a lot of people get greedy and then try to get back in if they didn't. If they didn't get out over here or over here, then they basically try to average down and try to catch this big move to try to come back up here to maybe get a new high. And that's possible, but that's a risky trade. So essentially right now, it's best to just stay away and go in the sideline and wait if you are say swing trader. That's why it's very important to understand what type of trader are you, a day trader, a swing trader, position trader, a trend trader. Different type of trader require different type of trading discipline. And right now, with the way that the price action is moving on Twitter, it's best to leave it for the day trading and not for the swing trading right now. So if you're not a day trader, just stand on the sideline and watch the price action develop and wait for the next setup. Good luck to you.